Hello guys, this is Oba FX Trading Academy. Welcome once again to my YouTube channel. It's been a while. I've been a bit under the weather and it's good to be back. So as it's customary of us, we do a lot of top-down analysis on this channel, whether we're talking about currency pair, Deriv synthetic indices, or cryptocurrency. So today we're going to be looking at one of the newly added Deriv synthetic index. But before I go on, I just want to take our time to quickly thank those of you that have been supporting the channel. I've been seeing the comment section, and somebody even asked that I do this at least 3 times a week. I'm not saying it's going to be easy to keep up with that, but I promise to do my best to drop more analysis videos because helping you guys out there is a priority to me. So thank you for those that have been supporting, liking my content and sharing it on other platforms. Thank you. I super appreciate. So let's quickly look into Crash 900 index. And as we all know, I like starting my analysis from the monthly time frame using pure price action trading strategy. However, if we look at this particular index, because it has just been added not so long ago, I think just the late part of last year, I think around November, December. So we can see that on the monthly time frame, we do not have so much data to work with. But however, what we can deduce is that we have a lot of bullish candles. So you can see that we have a lot of bullish candles on the monthly time frame. And as I've always told us, each candle here represents 1 month. So we can see that for 1, 2, 3, 4, 5 months, this particular index, buyers have been in total control. However, we can see that just most recently, the bears are trying to come into the market. In other words, sellers are trying to push price downwards. So that's all we can actually take from this time frame. So that takes us to the weekly time frame. Now, on the weekly time frame, it helps us to see the highs and the lows that we saw initially from the monthly time frame. Now, how do I mean? From those weekly time frame, we can simply see that the big picture it would be that the buyers pushed the price upwards to give us like a higher high. Sellers brought it down to give us a higher low. And now we have like a higher high with sellers with this big red candle currently showing us that sellers are trying to do something in the market. So on this time frame, we can try to add our basic tools. If you've been following me, you know that I use 3 major tools for my analysis: trend line, support and resistance, and the Fibonacci retracement tool. So the first thing I would like to do here would be to put my trend line here to see the big picture of what the market is actually trying to do. And what next? Then I can see that there's a place for my Fib tool from the swing low to swing high because we're dealing with an uptrending market. Also, I always talk about the Fibonacci retracement tool golden zone, and I said always, as I've always said, that's the zone between the 50% and 61.8% mark. And of course, I always also say that if this particular zone coincides with previous support or resistance zone, then that should give us more confidence about the strength of the zone. And as we can see here, this is a weekly time frame for 1, 2, 3 weeks. This zone now that we've mapped out resisted price, supported price from coming downwards, and of course price pushed upwards. So this makes this zone very, very solid. However, this confluence that we've just been able to get is on the weekly time frame. So it will take a long time. It might take a long time for price to come down into this particular zone. So a lot of traders do not have that sort of patience. So let's see what's happening in the much lower time frame. So the perfect scenario would be for price coming down into this zone, and then we'll look forward buy opportunities. However, let's see, can we get an internal trend line? Can we get a confluence in the much lower time frame to see if we can get trading opportunities now? So let's go to the daily time frame. So a lot of us that have been following me know that I talk about internal trend lines and maybe um, internal confluences. So the next thing I can easily spot here is that I can have a trend line here. So you can see we have the first touch of the trend line, the second touch is bouncing off from it, and then currently we're having a third touch of this trend line. Then another thing I can spot quickly is support zone. You can see this particular zone. Now, why is it a support zone? I've talked about support and resistance on this channel. You can check out the video, but basically you can see that price bounced off this particular zone severally. Each candle here represents a day. So for 1, 2, 3, 4, 5, 6, 7, 8 days, price, this particular zone acted as a support. And for another 1, 2, 3, 4, 5, 6, several other times it acted as what? A resistance. So that means this zone is really, really strong. And we'll be expecting a reaction from um, price as it is currently in this zone. So that means I can take out um, the confluence that I had for my much more bigger picture. I can decide to take this fib zone out just to make sure that we don't have like a crowded chart. As you all know, I like to keep it really, really simple. And to avoid maybe further confusion, I can take out this zone also. So let's keep it simple. However, I can leave the external trend line. Why? Why am I leaving the external trend line? Because you can see sellers are trying to do something in this market, even though price is in a very, very strong key point of interest. There's a probability that if price breaks through the zone, then we'll know that the next target would be to head towards this external trend line. So that's why I always say that the bigger time frame takes precedence. But because we are here now on the daily time frame, we can as well add our Fibonacci retracement zone, drawing from this place upwards, from the swing low to swing high. And of course, voila, what can we spot? We can see that our golden zone is currently aligning with our support zone, even though we had drawn them independently. So that will give me a lot of confidence that even if price were to leave the zone downwards, then something would have to happen. Something has to happen within this place. So the question would now be, what do I do next? How do I approach this particular scenario? So the next thing would be to go to the much lower time frames to look for buying opportunities, because we are in an uptrend. So if I come to the H4 time frame, how do I look for those buying opportunities? Buying opportunities means the presence of buyers. Of course, you know that this is a downtrend. The market is still making lower lows and lower highs. So for me to confidently buy in this market, I have to wait for what? A change of structure. That means there has to be like a change of structure in the lower time frame. This is H4. Because I spotted this on the daily time frame, I would like to look for my entries on the H1 time frame. So somebody might be asking, when do I buy this market? First of all, you have to add what's a counter trend line. A counter trend line simply means the trend line going in the opposite direction of the major direction. Now, the first thing would be to wait for the break of this counter trend line. So immediately price breaks this trend line and makes what's like a retest of it, then to be a good time to buy. So that's one entry model that I'll be looking at. Another entry model will be once there's a change of structure. Now we can see that the market has been making lower lows, lower highs, lower lows, lower highs, lower lows. It made a double top here and then also came here to make a lower high. So immediately price is able to take out the most recent lower high. So if price were to come, break this trend line, take out this most recent lower high, and then probably comes back to make a retest, then it will be a good time towards to take our buy trade. Another thing you can also look out for would be if the market makes like a double bottom or an inverse head and shoulder pattern. So putting all this together would help us make what informed decision or to when it comes to what placing our trade. So like you all know, I don't like to stretch my videos too long. This is my outlook on this particular Deriv synthetic index crash 900. So you can compare this with your analysis and see if it makes sense. And if you've gotten anything from watching this video and you've not subscribed, please smash the subscribe button, help build this channel so that a lot of other people can gain from it. As you all know, this is a trading academy. If you want to start out your trading journey, or you like this form of analysis, you want to learn this strategy from scratch, you can reach out to me via the contact I have on my YouTube bio. Thanks once again for supporting me always, and cheers.